I'm Bill Oughton of Oughton Claims Management.
I'm Chantal Roberts of CMR Consulting, and welcome to the Art of Adjusting podcast.
Today, we're going to talk about life as an insurance adjuster from the perspective of property, auto, liability, or workers' compensation adjusters. Our goal is to bring interesting topics in the world of claims adjusting to people who are working as an adjuster now and to people who are considering a career as a claims adjuster.
Hi, Bill.
Hey, Chantel, how are you?
I'm doing well, thank you. How are you?
Doing good. We're keeping really busy this time of year. It's
Mm,
kind of our busy season coming off of winter and all the slip and fall claims and stuff like that. So yeah, we're
yeah.
doing good. How about you?
We are starting to get all of the roofers coming around. I think I said last time I'm thinking about putting a sign up on the door saying that we are adjusters. Don't bother us. We know that our roof is okay, but it bleeds into over what we're going to be talking about today, which is construction claims and building claims in this spring now that things are thawing out, weather's getting warmer, so roofers are getting up on roofs. Break the construction crews are breaking ground. But I think you have some news, don't you?
Yeah, a little bit of news for ACM. We
Yay.
recently became a member of the New York Insurance Association, and that's a pretty big step for us. Uh, the carriers and organizations that are part of that, they help to shape legislation and regulatory things here in New York State, and most of my client companies are members of that. So it's something that we've been wanting to do for a long time, and we applied and we were accepted, and we're very happy about it.
Congratulations. That sounds like it's fabulous. And
Yeah.
and it's always good to uh, be involved with legislation or in a group. For all of our listeners, get involved because y'all are going to be the ones who can change things. Yeah.
Yep,
So
it's not just like a networking kind of an organization. They talk about underwriting, claims, legal and regulatory things,
mhm,
all at their yearly meetings, and it's a good place to be. So we're
absolutely.
looking forward to it.
Absolutely. Since we're doing news,
Yeah.
I let me look and see real quick when this podcast will come out. This podcast will be released on April 23rd, which is great. On May 7th, which is a Thursday, Fred Fisher and I will be doing a panel talk about the return on investment for claims, staffing, and education.
Mm.
And of course, anybody who knows me knows my stance, which is the claims department is the product of the insurance industry, period. Because it's not the policy, it is the promise to pay a covered claim. And the people who determine the promise to pay a covered claim are the adjusters. And when governing boards put hiring freezes on the adjusters or don't actively pay for the adjusters to pursue education, I mean, they may think that they say, yes, go get, you know, continuing education, but they don't really. Um, then we've got a disconnect. And my argument and Fred's argument that we're going to be putting forth in this panel is that if insurers hire more adjusters and educate them, they will make more money. And it sounds counterintuitive, but we have the math to prove it. So that's what we're going to be talking about May 7th. It is noon Eastern time. It's going to be a webinar. So it's free, by the way. Uh, with
Awesome.
the
That
with the
sounds great.
Academy of with the Academy of Insurance, we'll drop a link in the show notes. Okay, so after we've finished self-aggrandizing ourselves, because we are so grand,
We are grand.
we are
The
grand.
grandest of grand. Well, that's
We
great. Educating people in claims is hugely important, and I come across carriers that are understaffed and don't have the talent pool that they probably should have, and they wind up paying claims that they don't have to and they or shouldn't.
Hmm. Or it
And
goes to lawsuit.
it just goes right to the attorneys
Hmm.
and they're not saving any money there. So
Mm-mm. And so that's the whole, and I know the knee-jerk reaction for every single CEO, CFO, SOB in the governing board is, oh, AI. I got the answer for that, guys. AI is not the end all be all. It may I remind you of Colossus, but this is a whole nother podcast.
oh gosh, yeah, right.
Let's go on into it's spring.
It's springtime.
I am super excited. I don't know about you, because I know you're a little bit further north than I am. However, I have started planting some flowers and some trees and shrubs, and they're just starting to get their little greenery and all of that. So I'm uber excited about it. We, of course, will have like 80-degree weather today, thunderstorms tomorrow. It's supposed to be 60, and then Sunday it's supposed to be 74. So, woo, it's spring.
It's supposed to be 80 degrees tomorrow here and 39 degrees on Monday.
Ugh.
So
Ugh.
I don't know what you're supposed to do with that.
No,
Um,
and it's amazing. We get sick, and of course that's the way it is.
yeah,
But when we have these swings going back and forth, we've had our ice storms, and then snow, and then all of these freezing related claims that we have been talking about for the past 4 weeks or so.
right, right.
Those losses are now beginning to be repaired. And like I said, all the roofers are coming out of the rude work. They're not rude. They are not rude. They are very, very polite. They are. They are very, very polite. They're coming out of the woodwork, and we've got water damage claims, roof and siding claims. So we're moving on into the construction. And so now we have new risks and new perils that we as adjusters need to be paying attention to when we get these claims. And a lot of times these things overlap.
They do. Sometimes the guys that come out to fix your house cause damage to the house.
Mm,
And
they
that's when we
do.
get a call.
Yes.
So
Yes. Because, sometimes, and I do want to point this out, and I know I've pointed it out before. If the contractor causes a claim, causes damage, like
causes
you,
damage. Yeah.
you just said. I'm thinking of a claim that my husband just recently had, where a plumber, I think a drywaller, or no, it wasn't a drywaller, it was a um, carpenter. Carpenter was putting up something or other, and apparently couldn't see the pipe, I guess because the drywall was already in, or what have you, and drove a nail into the pipe.
Hmm.
Well, that was fortunately it was sealed. But then when the homeowner decided to move, everything
It
went
let loose.
sideways.
Right.
Yeah, and so in this particular instance, what the adjuster would need to do is not only file or act or do the claim, handle the claim for what the original damage was that was originally being fixed with the waller and the plumber, but file another claim against the carpenter. That's not all one claim, because we've got two separate dates of loss, two separate causes of loss, all of this sort of thing.
Yeah. Um, so you'd have a liability claim against the carpenter.
Yes.
Um,
Even though it's property damage. And I do make sure that I explain that to my students, because a lot of times we just think liability is only bodily injury or slip and falls and trip and falls. No, you can have property damage with a liability claim.
you do, and we have it a lot. Um,
Yes. Think of cars. Think of
yeah.
cars.
Yeah. So for that carpenter, then hopefully there's someone has a written contract with that carpenter and someone got a copy of the insurance certificate for that
Yes.
carpenter. And that you could argue that did he do anything wrong? He was just putting a nail in the wall like he was asked to do.
Right.
Could he have checked for pipes? Yeah, he probably should have.
Sure.
So I could
That's what
argue
stud finders are
that
for.
yeah, I could argue that he could have made a little bit more effort to avoid that. But the next question is, were the pipes placed that close to the drywall that a nail would be able to reach them? Because usually they're, I don't
You
know.
know, I
There's
don't
all kinds
know.
of questions you could have about
There
it.
there
But
are
that's what
all
makes the job so fun.
I see, and that's my thing too. And a lot of times I know places are now like municipalities or codes are now saying that if you're going to have a pipe go through a particular like 2x4 or the frame or whatever, you're supposed to put that metal shield there.
Right,
So
right,
yeah, so that a nail won't do this. Maybe that wasn't the case in this particular instance,
right.
but yeah, there are, if you're representing the carrier for the carpenter, there are some investigations that you need to do, and that's kind of what you were just talking about, those things. But if you are the homeowner carrier, you do need to make a separate claim. These are two separate claims that you would need.
Yeah,
You, so FYI.
yeah. Um, there's also subrogation. Your
Yes.
carrier
Yeah.
could pay for your damages and then go after the carpenters.
Let's talk about that. Can we just talk about that for just a minute?
Sure.
It seems to me, and of course, and I just did it, me personally, just immediately went over to filing a claim with the carpenter, which is what you should do. Absolutely. But I see so many times now that insurers and or the adjusters, and I think it goes back to being well educated, is they are telling the insureds, no, you need to go ahead and file that claim with the carpenter. And they don't open a claim with themselves. And I got to tell you guys, that is bad faith right there. And I'll tell you why, is because as soon as the carrier knows about a claim, they have the duty to investigate it. It says it right there in the Unfair Claims Trade Practices Act. And you know about it as soon as they tell you about it. And you, as the adjuster, are the rep or an agent, even an agent, you are the representative of the insurance carrier. And so you're kind of shooting your own employer in their foot if you don't open a claim. And I know that some of the agents are like, I don't want to because, their premiums can go up and blah, blah, blah. I get that, but we don't care. What we don't want is to be sued for bad faith. We want to put Chantal out of business as an expert witness. That's what we want to do. And it's all about me. I'm surprised y'all haven't learned this by now. I mean, I
Well,
don't
the
know.
other thing that needs to be mentioned here is that chances are you're going to have more benefits under your own policy than you would if you were to make that third party claim, because
Thank you.
the third party claim is going to be subject to depreciation.
Thank
Under
you.
your own policy, you probably have recoverable depreciation or
Mhm.
replacement cost policy. So, even though you'll have to pay your deductible, you'll get that back
You'll
if it's
get that back.
subrogated.
Yes.
So, when
Yes.
people ask me often, do I make a claim against the at-fault party or should I make a claim under my own carrier? Well, if you want it settled quickly and you want good customer service, you're more likely to get that from your own company
Hmm.
than from an adverse company.
Look, I do both. That's what I do. I do
You
both.
make a claim against both?
Yeah, I do. In my particular instance, I do both. I place the at fault party on notice because
Hmm.
they're going to need to do their own investigation.
Sure.
It's going to take them longer because you're right. They don't have the same time limitations and duties and all of that to me as a claimant as they do to their insured. So, me, I also file a claim against my own carrier. And listen, guys, what I'm saying is that that insured, even though someone else is at fault, still has coverage for that.
Hmm. Yep.
So you need to open a claim and investigate it and pay what you can pay. And then you send a subrogation letter over to the at-fault carrier. Hopefully they'll be finished with their investigation. Here's also points to consider. Just like you would put your or the insured's deductible in there, like pay the deductible directly to Chantal.
Hmm.
If there are any non-covered aspects of my claim that I have because that, you know, construction guy put a hole in my pipe or whatever, if that's the case, then also put that in there, but put it separate. Like, oh, by the way, you also owe her $1,000 for, I don't know, mold coverage, and we have a mold exclusion, so we haven't paid that. And
Right.
so you would need to pay not only the $500 deductible, but the 1,000 for this is what we haven't paid, but everything else you owe us.
Ryan reminds
Why?
me of a claim a few years ago where it was a first party claim that I handled, and a multifamily home was struck by a delivery truck and pushed the home right off the foundation. So the house basically had to be completely destroyed and rebuilt. He had an ACV policy, not
Mhm,
great.
mhm.
Um, but the limit was very low. It was like $95,000 or some crazy thing. So his damages were a lot more. Um, we settled the first party claim, but then my estimate, I furnished him with that so that he could pursue the balance of that claim um, against the trucking company, which he eventually did, I believe. So, yeah, bear in mind that if you ha don't have enough coverage under your own policy, or you don't have coverage for certain types of damage under your own policy, then you can make that claim against the other party.
Yes, and while we're talking about it too, adjusters, remember 9 times out of 10, I think maybe I'm going to go out on a limb and say maybe almost all states and territories and all that do have that 100% made whole policy. I mean, not all of them, but I mean, the vast majority of them do. And so you need to know what state you're in to know if you're made whole, because if you're making a subrogation demand, and this is a perfect example where the limit is only $95,000 and the damage, let's say, was 200 something thousand dollars, and you make a subrogation demand of $200,000, um, you don't get that money back. And of course, then there's all this uncovered damage, let's say $50,000 uncovered damage. The insured's going to get that $50,000 of uncovered damage if they accept liability. And then you as the carrier would only get 45,000 because it's all about being made whole. The insured, the person being made whole.
Right,
They getting paid 100% of their damages, so to speak.
right, right.
So
On an ACV basis.
on an ACV basis, of course. Anyway, but this leads to a great topic as well. And we may accidentally go into left field again with our replacement cost and holdback depreciation, because you and I, of course, are infamously on different sides of the spectrum on what can be depreciated. But that's not
Oh,
what we're talking about today. But
right.
we're talking about
Different
when do
rabbit
we,
hole.
yeah, whole different podcast, which we
Yeah.
actually have talked about. I want to say it's like back in the 20s or something like that. Go look for it.
Yeah, yeah.
Go Google it. We're famous for it. We debate it all the time. Anyway,
Yeah.
um, we talking about replacement cost and holdback depreciation.
Yeah, depreciation is just the reduction in value of a piece of property because of wear and tear, obsolescence, whatever. Um, happens to cars too. So, when you go buy a used car, you notice how it costs less than a new car. That's depreciation at work. The same thing happens with the house. Now, a house actually appreciates in va overall value, doesn't it?
Hmm.
But the stuff inside the house, like your carpet and your paint and your appliances, those things all wear out and have to be replaced over time. So components of a house get older and depreciate, but a house's value on balance tends to appreciate depending on where your market is.
Yes, and I would of course argue a little bit, saying, but you kind of dialed it back. In that, yes, houses are supposed to appreciate, but I think that is seen as an overall whole, and that is more of a marketplace issue.
Yes.
than an insurance issue. And this is something that is confusing to adjusters, especially new adjusters, I believe, when we're talking about the insurance value versus the market value. And this is something you have to learn because you need to explain it to the insured when we're talking about the coinsurance requirements. So, they may feel that they are insured to value by having a house insured at $450,000 because that's what the house would sell for. That's the market value. But if we were to rebuild it today with 2x4s and bricks and copper wiring and all of the labor that goes into it, it might be $850,000.
Yep,
So at $450,000, they are way underinsured. And
they are.
so,
And a
so
replacement cost policy, you have to kind of remember that it really kind of violates
mm,
the concept of indemnity because
doesn't it?
it's not, replacement cost is not apples to apples necessarily.
Right.
So and it does get confusing when you talk about the market value of the property, and the market itself can have such a heavy influence on the value of the property
Mhm.
that up or down, like you just gave an example where the home was worth less than it would cost to rebuild it. And
Right.
if you live in a depressed area where the real estate market is kind of depressed, then the value of that home is going to be market value is going to be a lot less than it would likely cost to rebuild it, especially if it's an old home. Like
Yes.
our house was built in the 1800s.
Yes.
So,
I like to tell when I was explaining this to my insureds, and to my students, I usually say, look, you can, for all intents and purposes, go to any Home Depot or Lowe's, whether it's in the bougie part of town or in the non-bougie part of town, and a 2x4 is pretty much going to cost the same.
mhm.
I mean, a couple of cents difference, maybe. But a 2x4 costs the same wherever. And that's what we're looking at, not the zip codes and the school systems and that sort of thing, which is what the kind of like the market or retail value of your home is. And that's a really good way to explain this. Now, the thing is, and I totally agree, and I also like to kind of blow my students' minds after I have drilled into them that you are not supposed to make a profit off of insurance. And then I will immediately turn right back around and ask, is that true? And as
Mhm.
you pointed out, yeah, no, because replacement cost just said my TV is worth $500, but you're giving me 700 to go buy a new one
Right.
and a better one and a bigger one.
Right.
Uh,
So it is kind of strange, but that's the premium you pay, that you buy a policy that promises to do that.
yes,
And the insurance business has decided that that kind of a product is worthwhile to sell to customers and to pay claims on. So
absolutely.
everybody's happy in the deal.
Everybody's happy, except for when we get to this whole holdback depreciation thing. And let's talk about some of the policy. We need to talk about the policy just real quick, like the homeowner's policy,
Mhm.
because I think it's kind of gotten a little twisted. Chip Merlin happens to bring this up, and I would encourage you, if you don't read Chip's blog, read it because it's the opposite point of view, and it's always good to know the opposite point of view, right? And the policy, the homeowner policy, basically says you have to tell us within 180 days if you're going to replace the property.
Right.
It does not say you have to replace the property within 180 days.
You have to notify us of your intent.
You have to notify us of your intent. So a lot of insurers are sitting there going, oh, well, 6 months have passed. You haven't replaced your property yet, Mr. Insured, so we're closing your file. No, 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 no. They just need to say, oh yeah, we're replacing the property. That's intent. That's them
Hmm.
notifying you.
Yep.
And if they're smart, they would, of course, write that down. And if you are smart, you not only put it in your notes, but you send out a letter saying, I understand that you're replacing your property.
Hmm.
And then tell them what
The
the statute is, because they
yeah,
definitely have to do it by the statute or file suit.
yeah, which under the policy is 2 years.
Yes.
It's not the statute that would rule over tort claims and things like that. It's a contractual statute.
Okay, so now we have holdback depreciation, right? And they've told us that the insured has told us that they're going to replace the property. Of course, our property policies are becoming pretty tight right now because of everything. I have seen roof schedules, like if you have a asphalt shingle roof that is 10 years old, we depreciate it by this amount of much. And if you have concrete shingles, blah, blah, blah. And if you have tiles, you got blah, blah, blah. There's also the thing that I was talking about earlier with Bill and me, we sit there and debate, do we depreciate labor? That would be in the policy. Yeah, if we are allowed to depreciate labor and taxes and permits and not
I've never
just,
seen that mentioned in the policy, though.
I have, I have.
Really? Hmm.
Yes. Yeah, they do. It happens to be manuscript. And of course, what we know is it's that manuscript means that the insurance company has written the policy themselves.
Hmm.
But yes, which also means, by the way, guys, that the DOI has either looked at it and approved it or just rubber stamped it. Either way, doesn't matter. It got approved, so we got to follow it,
Hmm.
whether Chantel agrees with it or not. That's the contract that the insured signed up for. Yeah. So
Yeah. Well, on the depreciation part of it and the holdback. So the
yes.
concept is for the uninitiated here, you get paid actual cash value upfront, which is replacement cost less depreciation, and that's the check you'll get is there's paperwork that's going to show that there's been depreciation taken off of the value of the claim. And that's recoverable if you have a replacement cost policy, but only after you've made the repairs. And like you had said earlier, you have to notify the carrier that you intend to make that replacement cost holdback claim. You have to notify the carrier within 180 days of the, I believe it's the date of loss. I think there's some arguments out there that it's the date that a proof of loss was signed, maybe. I've seen arguments about that, but nonetheless, 180 days is a long time. Just send the desk adjuster an email and let him know
Yes.
if you're worried about it.
Right.
So once the repairs are made, you can collect the depreciation. However, the language of the policy can confuse things a little bit because a lot of them will say that it's the amount actually spent to
Yeah.
make the repairs.
That's important, guys. Pay attention.
So if you found a cheaper contractor out there that was able to do the work for less than the replacement cost estimate that you settled the claim on, you're not going to get the full holdback. Um, that's just the way it is.
And adjusters, here is the deal again. Don't just cut a check that's lower than the amount of the recoverable depreciation on the estimate. You need to explain to the insured using your words, as in picking up the phone and then writing a
Mhm.
letter, uh, why the payment will be lower, right? Because again, they don't trust us, and what we're doing, and what Bill and I are advocating is how to be a better adjuster and how to get them to them being the claimant, either first or third party, to trust you so that your job is easier. And we all want to have easier jobs.
We do.
Yes. So the timing disputes around scope and completed work is also a huge thing, I think, and I see this quite a bit as an expert. It comes up quite a bit when our insureds are unsophisticated and they don't want to begin repairs because, and we mentioned this very briefly last week, where they don't want to begin repairs because they believe it will stop or destroy their ability to have a future claim. And so they sit there waiting for a quote final estimate.
Hmm.
And this is where you as an adjuster need to explain it's not like there's no such thing as a final estimate, but the final estimate is really going to be when the claim is closed and the property is fixed. And so we can't know that until you get the property done. It's kind of
Right,
like a
right.
chicken and an egg thing. And so you really need to hold the insured's hand. And again, one of the best ways I have found to do this is to have your field adjuster out there with the insured's contractor at the same time, walking the property to discuss the scope of the damages and try to come up with an agreed price.
Yep. And I've been in situations where the insured did not want to settle based on the known damage because there was hidden damage that they were concerned about.
Yes.
And that is easily solved by just making a payment for the undisputed amount of damages. So
Yes.
everybody agrees on what actually is damaged. And yeah, there might be some more damage that we won't know about until things get started, but we still have an estimate, we still have depreciation. You can still sign a proof of loss, which is not a release of any kind.
Which we talked about last
Um,
week. Mhm.
and life can move forward. So,
And
um,
here's what we need to think about in this particular instance, as you said very astutely. Um, you pay what you know you owe when you know you owe it. Okay.
mhm.
If you don't, guys, again, we're breaching our duties as an insurer. This is when Chantel gets involved. And again, Chantel is lazy. She doesn't want to do that. Okay. So what we would then need to do, and I look, I get it. Bill gets it. We all get it. The insured is scared. We deal with this every day. They don't. So
Right.
they don't know if there is hidden damage. You need to tell them what to do. Hey, if there's hidden damage, stop the, repair, call me. I'll send Bill out again. Put it down in writing because they don't trust you. And if they have it in writing, then they can go, yeah, see here, you said so. And then also you need to think about possibly sending out a reservation of rights letter. Most insurers don't like doing that, but you need to seriously consider it because if the insured is not repairing their property or protecting it from further loss, you as the carrier or as the adjuster representing the carrier could be waiving that defense. So very
And
important
and
stuff.
and for property owners, when you get a check from an insurance company and you don't agree with the amount,
Mhm.
that doesn't mean that cashing the check is necessarily you saying, well, I guess that's,
Yeah.
I guess the insurance company wins here and I don't get them. That's not the case at all. Cash the check, get the repair started. You can still, if there's items that the adjuster still needs to see, for by all means, make sure those don't get repaired yet or whatever, so that they're available to view so that you can make that supplemental claim. But supplements are a thing, and
Yes.
they happen almost every claim.
Yeah.
Not every claim, but a lot of them.
Yes. So now we have contractors who are on the property, repairing the property, and there is some risk there. There's some liability exposures there. The one thing I always think about is maybe a apartment complex having a roof claim and how the roofer has to basically kind of shut down that that apartment building, like maybe one out of 20, because they're throwing the old roof off the three stories high or whatever. There's nails everywhere, blah, blah, blah. And you could have injuries to the tenants, to visitors, to pedestrians or whatever. And so you could have third party injuries.
Sure. That's our next topic,
Yeah,
actually.
absolutely. Yeah. See how
Contractor
I weaved
risk
it
and
in?
liability exposure.
Just weaved it in right there.
So when you get these contractors out to your property, whether it's a home or a commercial site, before they step foot on your property, you're going to want to make sure that you have a written contract and that you have their insurance information through a certificate. And you'll want to verify that they've got general liability and workers' compensation coverage. And if you're a commercial property owner here in New York, you want to be additional insured on that uh, insurance certificate, and you want the contract to say that the contractor is going to defend and indemnify you. Otherwise, you're subject to labor law 240 claims, which in New York is strict liability for anybody who falls from a height, or if it's a falling worker, falling object statute.
Mhm.
Um, so that can get complicated and can make your life miserable if you don't have the right coverage in place.
Mhm. So what you're looking for, even as the adjuster and or the landlord, homeowner, whatever, is that certificate of insurance. I I ne just I have issues with the certificate of insurance because they are only good for that particular point in time.
Mhm.
So, I mean, it's perfectly plausible that the contractor could cancel it like as soon as he leaves your location. Does it
Immediately.
happen? I mean, not really. And there's very specific information that needs to go on the certificate of insurance, which, lists the policy, the dates, that sort of thing. Sometimes the insurer or the insured, meaning the contractor, would like all of the endorsements to be listed as well. But whether that can be done or not, I think depends on the states and whatever. Um, However, what I would do is simply call that agent that is listed on that certificate of insurance and say, hey, do they still have good, general liability coverage or workers' compensation coverage or whatever? And the reason you, as the adjuster, needs to know this is because that contractor would also have contracts with all the subcontractors. And, we need to know, all right, we got to call him and put him on notice. And then when we're talking to that adjuster over there, do you know who the other people are and all of this kind of stuff? And construction claims are fun. They are huge, especially when you get all of the subcontractors involved. And hopefully we don't have that issue.
The other thing to be concerned about is when a contractor does bad work.
Hmm.
Um, we get a lot of claims for poor workmanship, and that's excluded. Your work product is not covered. Even if you have products and completed operations coverage, which is designed um, to protect you from liability caused by your work product,
Right.
um, damage to your work product itself is not covered because that would be like a warranty
Hmm.
policy against bad workmanship. And that's not what insurance is designed to do. So, and unfortunately, those don't have any happy endings because you've got a claimant property owner who's got bad work that has to be corrected, and you've got a contractor that doesn't want to correct it. So it's just a bad situation all the way around.
So this is again kind of what we were talking about going somewhat full circle is if you are the insurance company for the landlord and or homeowner, and that happens to be covered, a covered claim, you would need to open a claim for that
Hmm.
and and then attempt to subrogate. You don't foist your insured off on the contractor saying, yeah, you just need to sue. Mm-mm. No, that's your job.
Right.
So again, I think that this is just, maybe a educational issue that some of our newer adjusters don't necessarily know.
Yeah, you got to take ownership of a claim against the policy that you've issued to a policyholder. And if they make a claim, handle it,
Yeah,
pay it, and then subrogate when you have an opportunity to do that.
absolutely. Absolutely. Yep. Because that's again what they're paying premiums for. Yeah.
Yes, yes.
Yeah. Um, what other kind of liability exposures? One that I happen to be thinking about right now is Overland Park is going to be repaving our side streets and all the way down through the neighborhoods and everything. And I know how they're going to do it is like they would be paving one side of the street and all of us park on the other side of the street. And then, yeah, a couple of days later, we flip, we all park on the other side of the street and they pave the unpaved part of it. And I just sit there and think because I've worked these claims, oh, you're going to have these tar claims and
Hmm.
all of this sort of thing. And I started thinking about how adjusters may not know that there are body shops who can just take off that tar without having to do a whole paint job because we got a lot of claims from contractors doing this, like overspray claims or what have you, where everybody wanted to get a new paint job on their car, and that's not necessarily it. And it's not necessarily this contractor risk liability exposure. It's what I'm saying is the claimants don't necessarily get a brand new paint job just because your insured has put some tar on their car. There's ways to take that off.
There is. And have you ever had an claim?
I have. I've worked quite a few of them.
Yeah, so bridge work is common because the wind blows and
Hmm.
they're spraying the bridge and the
Hmm.
parking lot gets blasted with green paint.
Hmm. Yeah.
Those can be
And
interesting.
there are body shops that or paint shops that actually deal specifically with that. And it's basically they take a Q-tip and they just like take off this little bitty part and they take off this little
Mm,
bitty part. And we're talking maybe $1,500 versus a $7,000 paint job.
right.
And again, remember, because we're the third party in this particular instance, we only have to pay ACV and we would pay to repair or replace it. And if we can repair it for $1,500, that's what we're going to do. Might
Right.
not be what the owner wants. And if the owner wants a brand new paint job, then maybe the owner goes to their own insurance company who might pay for a whole new paint job. But again, all we are paying for to the other insurance company is that $1,500 because that's all we owe.
Had one a few years ago, many years ago now, I guess. It was a brand of car that had a lot of black matte finish kind of
Mm,
black plastic parts on it.
mm,
And they could not get the paint off it without altering the finish. So
mm.
we wound up paying for all those plastic parts to be replaced,
That
unfortunately.
Yeah,
Yeah.
that does happen, but it is rare. I was just thinking about that driving to the grocery store the other day, like, oh, this is a good topic that we might want to talk about. We have talked we have spoken a little bit about the written contracts for construction works and certificates of insurance and
Yep.
verifying that. And what kind of investigation challenges do you see in these kind of spring claims? I can think of a few right off the top of my head.
Well, what I found is contractors, if they do cause damage to something, they want to keep moving, and a lot of times they just fix it and move on,
Mm,
and then they'll make the. So if you're a contractor and you cause damage to a building and you can fix it, at least wait till you make a claim and allow the adjuster to see it,
yeah.
because if you just if you fix it before anybody can see it, you kind of took away any evidence that there was damage. So how are we supposed to verify the cost?
Yeah. And
And
that is also in violation of your duties as an insured, which is to allow us to inspect the property. If it absolutely one of those things that absolutely positively has to get corrected, such as, we got to turn off water
mhm,
or something like that, take a picture.
Yeah.
which is something that I did. We talked very briefly about how I had a frozen pipe outside. It caused my sump pump pipes inside the house to come undone, and I had water spraying everywhere. Wasn't sure if it was immediately going to be covered, but what I started doing was taking video, taking photographs, showing where the water was damaged, showing us cleaning up the damage so that if I did turn in a claim a few days later to my insurance company, they would have that evidence, even though I've changed the scene. I wasn't just going
So
to let it keep on spraying everywhere while I wait for an adjuster to come.
most people today are pretty with cell phones. They're pretty quick to take photos and video, and so we don't really run into that problem very often. But one thing that we still do continuously get from contractors is when they cause damage, they go ahead and fix the damage, and
Mm.
then they put their hand out and they say, "I want to be paid now for the repairs that I made," which makes it tough because the
Yes.
general liability part of your policy isn't designed to pay your policyholder,
Yes.
and it makes it almost
Well,
impossible to get a release from the property owner.
would that not be covered if the cause of loss would be something that the insured did? Because you just said if the insured did bad work, uh, then that's
Well,
not what something that the policy pays for. And
here's an example.
okay.
Roofer is roofing a house,
Mm.
and um, they drop a bundle of shingles on the roof, and it goes through the roofing and crashes down through the living room. So they run down there and they fix it all up, and they fix the roof. And it took them, X number of hours and materials to make that repair. So that would be an example of property damage caused by negligence.
Mm.
Um, Now, if they put the roof on and it was horrible and it looked bad and it
Yes.
leaked because it wasn't installed properly, that's not covered. That's work product.
Right.
So,
So in this particular instance, the first instance where they drop the shingles, they go through the attic, through the first floor down to the second floor, or the second floor down to the first floor, and the roofer fixes all of that up. How do you, as the adjuster, handle that?
it's tough. We've issued checks to the contractor before, but what you want to do is do a comparison estimate just to make sure it's fair.
Mm.
Um, you're not going to be able to get a release. I mean, you can ask for a release from the property owner. They may or may not, you know, do anything about it. But ultimately, the job of the liability section of the policy is to defend and indemnify the policyholder. So you're actually indemnifying them.
Mhm.
So that's my take on that.
Okay. Okay. I would also, I guess, be asking for receipts,
Oh, sure. Yeah.
invoices showing that they actually did the work and that sort of thing.
Most
Um,
times when I've gotten claims like that, they're not big,
mm,
you
mhm,
know,
mhm.
and and the contractor feels terrible. And they're like, look, if you can just reimburse me for materials, that's all I need, you
Yeah,
know. So these are not big disputes, but sometimes it can be.
yeah.
The potential's there.
It always, always. So what kind of practical advice do you have for our policyholders and our adjusters who are handling this building season kind of claim?
I would say make sure you're going to be interviewing reputable contractors, and I wouldn't go with the first bid or your first interview. I would get at least three is the general rule and compare them apples to apples. Your spidey senses should be telling you if someone's a creep or not. Better Business Bureau is a good resource. Friends and family, whoever, can recommend somebody that has actually done work on their property, that'd be a good place to start. Another good place to start is to talk to folks who have already done work at your property who you liked and say, hey, I know you're a plumber, but now I need this roof repair done. Do you have any recommendations for that?
Those
And
guys talk
chances
to
are,
one another. Those guys
oh,
talk to
yeah.
one another. And, I love my plumber and he's from Arkansas. So we joke about how we're really brother, sister, aunt, uncle, grandma, and grandpa together. And because, there's no branches in our family tree. And he introduced me to like now my favorite electrician who I think I told you one time I almost burned down the house because I had pulled some electricity from a higher voltage. I didn't know. And he was very kind and didn't mock me and go, "Oh my gosh, this homeowner here." He explained to me what the different colors were and all of this. Where I'm like, in Arkansas, we don't do that. We don't do that at all. And he let me watch him just like I was his little apprentice and ask him all sorts of questions. So what I'm saying is in that story, again, yeah, ask your favorite plumber, ask your favorite electrician, ask your vet or whomever, but because those people talk to one another. Um, yeah, and I would also I had a point, but I don't know what it is. Okay. Oh, setting expectations more for the adjusters talking with the insureds, and around the holdback and the timelines and things of that nature. Uh, Overestimate. Be like Scotty with the Enterprise.
Hmm.
Uh, you know, I need it done in an hour, Scotty, and you're like, oh, I can't do it until a week and a half, Captain, and you can do it in 30 minutes, kind of deal. But you're not going to tell the captain that. Same thing with talking to your insured. I'm not saying lie to them. That's not what I'm saying. I'm
Hmm.
saying what I would do is I'm going to assign this to a field adjuster. They have 24 to 48 hours to contact you. Then they have a week to take a look at the property. I would give them, I don't know, 3 or 4 days, business days to write up a report and get that back to me. So, what are we looking at? Probably 2 weeks before you hear from me or anything, just, and am I going to get it back before then? Probably, because I'm definitely following up within 7 business days. But you
Right.
see what I'm saying is that we're setting that expectation. And with the holdback, we're also going to set that expectation. Like your policy states that we're going to take depreciation off of XYZ and explain what that is. And yeah, I want your contractor out there with my guys so that we can all get this done and agreed on. And
And one thing you'll run into as an adjuster is that when you start talking about the way the policy works and policy language and the overall mechanics of the claim, the insured's eyes are going to glaze over and they're going to hear only about
wah, wah,
25%
wah,
of what you
wah.
say.
Mm-hmm.
So it's worth repeating. It's worth issuing a piece of paper, a letter of some sort to them explaining those things as well, because not everybody is going to absorb. They're not going to pick up what you're putting down necessarily. So
Yes.
you can be as clear as can be about your communication, and you can speak in perfect English, and you can verbalize everything perfectly, but it's a complex thing sometimes, and people just don't always get it,
Right.
and they
That's where you
have
have to repeat it.
repeat it and uh, guaranteed they'll ask questions that you've answered 2 or 3 times already, but that's kind of part of the job. That's why AI isn't going to ever take our jobs. It's because we need a human being speaking to another human being.
Right. Right. So also make sure you do your good documentation on there.
Hmm.
And that's not only your letters, but in your claim notes, saying that you spoke with who you spoke with, what y'all talked about, these sorts of things. And yeah, use your words. And I know that a lot of people don't want to answer the phones or whatever. Again, I'm seeing a lot of times where adjusters will text the insured, "Hey, I'm going to call you between 9 and 10. Please pick up the phone," or whatever.
Hmm.
It's a really good thing to do, to have the insured pick up the phone so you're not playing phone tag or trading emails, because there's a lot of times that I, as an expert witness, am reading an email, and by the seventh one, I'm sitting there screaming, "Pick up the phone," uh, to everybody who obviously can't hear me by that point. So,
So,
um,
well, the building season, it's here, whether we like it or not. I think most people are glad it's here so that we
yes.
can get some work done. We're having our house painted this year, so
Woo! Yeah,
yeah,
it's what
great
I need to
fun.
do too. Need to get that done. I got some wood rot that I need to get taken care of. So I will be having contractors here. Our next episode is going to be on May 7th, which will be that same day that Fred Fisher and I have that podcast or webinar. So, I mean, you could have a whole day of listening to me, which I know everybody would be like, "Oh, that'd be fabulous," except for
And
my
that'll be a
husband.
live event, correct?
Yes, yes, it is being
Awesome.
recorded. So even if you sign up for it, you can listen to it later, and it's free. So, but next, in 2 weeks, we're going to be talking about summer liability. Ooh, yummy. Pools, lawnmowers, and backyard risks, which is going to be right in time for our summer, uh, Memorial Day, July 4th, all of that kind of fun jazz.
Oh, yes.
Yeah.
Great fun. Looking forward to
Absolutely.
summer.
Me too. Me too. So we will see you in 2 weeks.
Yes, ma'am. Take
Bye.
care. Thanks
Bye.
for joining us on the Art of Adjusting podcast, where we talk about life as an insurance adjuster.
If you enjoyed this podcast or this episode, please give us 5 stars and a review. It does help the algorithm pick us up.
Hit that subscribe button real quick and tell all of your adjuster friends to check this out as well. For independent adjusting services, go to www.auton.claims. And for anyone interested in working as an independent liability adjuster, go to the Contact Us tab to join our roster.
In the meantime, you can contact me at theartofadjusting.com for consulting and training purposes.